CP24 Money.
And with a closer look at today's business news and headlines, we're joined live in studio by Friday's Darren Farwell, Senior Wealth Advisor with Farwell Wealth Management at Scotia McLeod.
Thanks,
I know, that's a bit of a tongue twister, I know. Well, earlier this week it looked like the TSX was having a great rally, but it kind of ended down today. Why is that?
Well, bottom line is it's jobs, U.S. jobs. It did look last week and early this week like the market was going to kind of ignore the concerns about European debt and a slower than expected U.S. economy. But today's announcement of the U.S. creating 18,000 jobs across the country definitely put an end to that. Right. I mean, we were expecting 105,000.
To put things into perspective.
Well, if you put it in perspective, in Canada, we created 28,400 jobs in an economy a tenth the size. Markets couldn't ignore that, so the dryers buyed up and the market went lower.
And so why hasn't job growth taken off as much as we had anticipated in the U.S.?
Just slower economy. We're just not getting people spending money. And when people don't spend, I mean, it's kind of they're related to each other, because if you think of a family in the United States with one person with a job and the spouse looking for a job, okay, if the second spouse gets the job, they're going to start spending a little bit more money on goods that we're likely to send to the United States for them to buy.
Right.
But if the second spouse doesn't get the job, they're going to be more cautious, less spending.
Okay, and so the American consumer is still quite nervous, and that is what we're saying.
Very much so. That's a good way of putting it.
All right, thank you so much for joining us.
Okay,
and that's Darren Farwell joining us live in studio. Farah, it's back to you.
All right, thanks so much for that.